Welcome back, and in your top business story, the Dubai Commodities Exchange announced today the launch of the copper futures, the region's first ever copper contracts that will go live on April 20th, 2012. According to an official DGCX statement, the introduction of this new futures contract is the result of both favorable market conditions and a high demand from market participants. They added that over 600,000 tons of copper is consumed annually in the Middle East, and with significant construction and infrastructure projects in the pipeline, the demand for copper will continue to grow across the region. The DGCX copper futures contracts will trade from 8:30 a.m. to 11:30 p.m. Dubai time, and the contract is sized at 5 metric tons. The contrast is cash settled against the New York futures settlement price for copper to maximize its financial use. So why is the Middle Eastern listing being done now, and what can we expect for the commodity through this new introduction?
If you see the growth in the Middle East over the last few years, there has been a considerable amount of industrial growth in the Middle East. I mean, you just have to look around the amount of construction activity that's happening in the Middle East, Saudi, Qatar, Kuwait, and more recently in Africa, where there's a massive amount of industrial activity that's happening. All that industrial activity requires copper. So I think copper is highly relevant in the Middle East. And for our members have voted it as their most required contract late last year when we ran a survey with them. It took us a few months to do our preparation, or lay the groundwork, and to create a contract that is relevant. So we feel that the timing is extremely right. It reflects the growing need in the Middle East, given the growth opportunities here. So I think it'll be a very relevant contract in this region.
Most of the big miners already tie up long-term off agreements with buyers, therefore not a huge fluctuation. So are there enough market participants in Dubai, or even enough DGCX participants to make market share?
We do think that there are lots of opportunities and lots of market makers and market players in Dubai. I mentioned earlier the processors in the region. There are there's a big scrap community, copper scrap community in the region as well. There are lots of our members. We have 265 members who are always interested in trading and hedging different commodity contracts that are listed on DGCX. So we do feel that there is an opportunity. Second aspect is that the world of financial markets are electronic, and by definition electronic is global. So we feel that miners and producers around the world will also be able to take opportunity for a contract that listed in Dubai because of the distinct time zone advantage that Dubai has to offer.
23,000 new units of supply have been forecast to enter the market this year, a rise of 6% in addition to the 340,000 properties already in Dubai. The forecast was made by property consultancy company Jones Lang LaSalle. The number of sales in the fourth quarter of last year rose 64% according to figures released by the Dubai Land Department, which highlights that demand is rising at a faster rate of supply. Additionally, Dubai house prices rose by 2.3% in the last 3 months of 2011, according to the latest Knight Frank Global House Price Index, underlining the strong demand in the luxury segment. Property experts as Tesco have also pointed out in their first quarter report that developments in established locations are now approaching full occupancy and that the rents are increasing. Aldar Properties' long-term credit rating has been raised to B+ from B by ratings agency Standard & Poor's, with its outlook set as stable. The ratings agency stated that Aldar's liquidity position was strengthened after receiving a 4 billion dirham revolving facility from National Bank of Abu Dhabi. In a statement, Standard & Poor's said that the stable outlook reflects their expectations that the government will continue to support Aldar, enabling it to maintain adequate liquidity and stabilize its operating cash flow generation over the next 2 to 3 years. It added that at the same time, they have affirmed the short-term corporate rating at B. With that, let's now take a look at the stock indices across the GCC. Previous Previous World Bank presidents have been politicians or financiers, while Kim is an academic with expertise in health and development. So what will Jim Young Kim be able to bring to the table as president, and will he have any more influence on giving developing countries a stronger voice? Well, we earlier spoke with Bruce Powers, the head of Trust Securities Middle East.
Well, I do think that he'll help bring a stronger voice to the developing countries. His background includes over 25 years working in these developing countries on health initiatives and so forth. And I think this will give him a much wider perspective on how best to solve problems, how to accomplish the bank's goal of helping to pull developing countries out of poverty. His science background should help him approach problems from a more practical perspective without the political viewpoint that has come along with it many times for the World Bank in the past. He's worked in many developing countries from the ground up, working with patients and helping to roll out health initiatives. This should give them a much better idea of where the problems really lie, how to solve them, and how to get these countries out of the situations that they're in. Even though he's worked on many social programs, he still believes in a market-based approach to helping to pull countries out of poverty and create jobs. There has been some contention about having another American to head the World Bank, which has been the case in the past, but I think that since he is not coming from from finance or a political background, which has always been the case in the past, this will help alleviate any concerns around the world that have come up.